What's up, beautiful people? Welcome to the channel that is empowering you with the knowledge to help you build generational wealth. My name is Mia and I reveal the financial education that we do not learn in high school. And in today's video, we are going to tackle the subject of taxes and cover what you need to know about all of the child tax credits that are available to those eligible. Yes, there is more than one. And if you want to know just how much money is on the table this tax season, then stay tuned. So the child tax credit increase that we received in the last stimulus effort is not the only increase that we are being reimbursed for having children. Let's take a quick trip down memory lane as a reminder of the first child tax credit increase and the eligibility requirement. You qualify are single taxpayers with an adjusted gross income of $75,000 and married taxpayers with an AGI of up to $150K. Normally, for those who qualify, the child tax credit is $2,000 per child under the age of 17. In this COVID relief effort, there is a one-time increase, meaning this is temporary, of $3,000 per child under 17, $3,600 under the age of 6. So really quick, what ended up happening is if you did not opt out, then you received half of your child tax credit last year via monthly payments between July and December. And if you have not already received it, then be on the lookout for a letter from the IRS detailing just how much you have already received. You will need this when filing your taxes this year. And as long as you are still eligible, meaning you meet the income eligibility requirements on your 2021 tax return, because remember, the half you received last year was based on the last tax return you filed, which would have been 2020 tax data. So if your income has increased since then, or your children exceed the age limit now, it's likely that you will not receive the rest or a portion of your child tax credit depending upon how many children you have. And it might be possible that you may even owe the money back if you are no longer eligible but you did receive the advance payments. People need to be aware of this and plan accordingly. But you may also receive money if you had a child last year that was not included in your last tax return. So there's that too. Now, if you opted out of the advance payments, then you don't have anything to worry about. You will get whatever you are eligible to receive when you file your 2021 tax returns. Now, the good part, there's another child tax credit separate from this one that has also increased. But before we go there, I want to announce the first giveaway of this year. I am excited. This year is all about focus for me, consistency, and bringing you guys fresh new content that will help you reach your financial goals. Another thing that will help you reach your financial goals, money. So I will be doing a $100 cash giveaway to 2 subscribers. That's $200 total, and all you have to do is be a subscriber and follow me on Instagram. Easy peasy. You have more than one chance to win, and even if you don't win this one, there will be so many more to come, so stay tuned. Now, let's get back to business. So, child tax credit increased from $2,000 per child to either $3,000 or $3,600 depending on the kid's age. And you will receive the rest based on whether you opted out of the advance payments when you file your taxes this year if you are still eligible. The other notable tax credit increase is the child and dependent care credit for all of my poor parents who have to pay those outrageous child care fees so you can go to work. This is a federal tax benefit for you. But wait, because this is also a credit for you if you pay for an incapacitated spouse or an adult dependent. Before the change, the maximum amount that you could apply towards the credit for one child or incapacitated adult was $3,000. For more than one dependent, the max went up to $6,000. You have received up to 35% of your dependent care expenses, but only if you owe taxes. This credit is typically non-refundable, meaning you wouldn't get it if you were receiving a tax refund. It would only be applied as a way to reduce your tax bill. For your 2021 tax return, though, there are quite a few changes that you need to be aware of. First of all, the credit is now refundable, meaning whatever your credit is, you will get it back whether you owe taxes or not. So even if you're getting a tax refund, this credit will now be added to it. Before, you wouldn't have gotten it. The second change is the expenses you are allowed to apply towards the credit have increased from $3,000 to $8,000 for one dependent and from $6,000 to $16,000 for more than one dependent. And lastly, the percentage you will be reimbursed has also increased, but is based on your adjusted gross income. Reference the table that's on the screen and I'll give you just a few seconds. You can pause it if you need more. So if you have one child and your adjusted gross income is less than the $125,000, then you will receive a maximum credit of $4,000. In order to be eligible for the Child Independent Care Credit, you had to have paid for care in 2021 for a child under the age of 13 who you claimed as a dependent, or for the care of a spouse or dependent who is not able to take care of themselves who lived with you for more than half the year. In order to be eligible, you must have needed the child or dependent care because you were working or looking for work. And for two-parent household, that means that both parents had to have either worked or had been looking for work in order to be eligible for this credit. And lastly, you must have spent less for dependent care in 2021 than your total income for the year. Qualifying dependent care expenses are daycare, doesn't matter if it's at a center, home daycare, church, summer camp, or care provided by a neighbor or a relative. However, that relative cannot be your spouse or your child or another child or dependent that you did not claim as a dependent. If you receive free child care, that does not qualify. Tuition expenses for private school does not qualify, but before and after care expenses do. And please don't lie, because they're going to ask for verification, and do not think that the IRS will not audit you, okay? You have been warned. If you qualify for the Child Independent Care Credit and the Child Tax Credit and the Earned Income Tax Credit, which we did not talk about today, you can claim all three. Your eligibility for one does not disqualify you or affect your eligibility for the other. Now, just like the increased Child Tax Credit, the Child Independent Care Credit changes are only temporary. Unless there's a regulation passed that extends the benefits, they will only be applied for the filing of the 2021 tax returns, and the regular rates will pick up this year for when you file your taxes next year. But like always, if you have any questions, please let me know. Leave a comment, IM me, email me. Any and everything that you need to reach me is in the description box. Like this video if it helped or taught you something that you didn't know, and don't forget about the giveaway. Until next time.